Hello everyone, myself Sanyukta Burade and my topic is trading account along with specimen. What do you mean by trading account? The trading account of an organization reveals its gross profit or loss. It reflects the result of buying and selling of goods and services in which the business organization deals during a trading period. While the trading account includes direct expenses associated with its purchases and sales of goods and services, the operating expenses of business organization are excluded. At the end of an accounting period, every business organization is interested in knowing the result or its performance whether through the trading account. Organization has earned gross profit or incurred gross loss. This result, gross profit or gross loss, is discovered. Gross profit is nothing but the excess of sales and closing stock over the opening stock purchases and sales. This is the format of trading account. Items appearing on debit side of trading account. First is purchases. Goods purchased by a business organization for the purpose of its resale are shown in the debit side of trading accounts as purchases. Goods bought on cash payment as well as credit basis are included under the head purchases. Goods taken out for the personal use of the proprietors of the organization are debited to their drawing account and reduced from the purchases. Second is purchase return. A part of a goods purchases for the purpose of resale by an organization sometimes becomes surplus, which is returned to its concerned supplier. Such goods are referred to as purchase return or purchase outward and shown as deduction from the purchasers. Return outwards account is always having credit balance. Next is opening stock. The amount shown as the opening stock of the current year's trading account is in fact the closing stock of the previous year balance, which has been brought forward to the current year. Opening stock appears on the debit side of the trading account. Fourth is wages. Wages are the monetary compensation paid by the business organization to its workers for the work done by them in the connection with the production of the goods. If the manufacturing account is prepared by the business organization, they are debited to that account. Otherwise, the trading account is debited. Fifth is carriage inwards. Carriage inwards, also termed as freight, is the shipping and handling expenses incurred by the company while receiving goods from the supplier. These expenses are shown on the debit side of trading account. Next is customs and import duty. Customs and import duty are the statutory expenses incurred in the connection with the import of the goods from the overseas market. They appear on the debit side of the trading account. Seventh is royalty. Royalty is defined as the payment made to the owner for the use of the property, patents and copyright works, franchises or natural resources like mines, tea garden, etc. It is paid by those who make use of the assets for the commercial purposes. The mechanism of the royalty payment has been evolved as the means of compensation by the owner. Gas, electricity, water and fuel. The expenses pertaining to gas, electricity, water and fuel are incurred in the connection with the day-to-day operations of an organization. They are considered as a direct expenses and are debited to the trading account. Next is packaging material. Most goods manufactured in a factory needs to be packed properly for their safe transportation to the customer place. The expenses incurred in this regard are considered as a part of the finished good and are debited to the trading account. Next, item appearing on the credit side of the trading account. First is sales. Sales of the goods of an organization deals with whether it is cash or credit is shown on the credit side of the trading account. Sales of the assets or the items the organization it does not deal with are not included under sales. Next is sales return. The sales return or the return inwards include goods supplied earlier to the customers and subsequently returned by them. The amount of the goods sold or return is deducted from the sales figure. Sales return account has a debit balance. Next is closing stock. The stock of the goods remain unsold at the year end is termed as a closing stock. The amount of such stock appears on the credit side of the trading account. Closing stock is not a part of the ledger and is out of the preview of the trading balance. Generally, the figure of the closing stock is given separately.
हाँ, economics.
A profit and loss account is a financial statement that shows the business income or expenses and a net profit or a loss over a specific period. Items appearing in the profit and loss account. First is salaries. Salaries are the operating expenses and appear on the debit side of the profit and loss account. They represent payments made to the employees for their services. Next is rent. Rent paid is an expense and is debited in the profit and loss account. If rent is received, example, subletting property, it is known as an income on the credit side. Next is discount, cash discount. This is given on the receipt for the prompt payment. Discount allowed, shown as an expenses on the debit side. Discount received is shown as the income on the credit side. Trade discount, it is not recorded in the profit and loss account as it is deducted directly from the invoice value. Next is bad debt, represents amount that cannot be recovered from the debtors. It is an expense debited in the profit and loss account. Any recovery of the previously return of bad debts is credited as the income. Next is carriage outward. Expenses incurred on the transporting goods to the customer, and it is shown as the selling expenses on the debit side. Next is loss by the fire. If the loss is incurred, it is debited in the profit and loss account as the abnormal loss. If partial is incurred, it is in assured portion and it is debited. Next is theft. Similar to the loss by the fire, theft results in abnormal loss and it is debited in the profit and loss account. Next is loss or gain on the sales of the fixed assets. Loss is debited in the profit and loss account as an expenses. Gain, it is credited as the income. Next is items not appearing in profit and loss account. First is trade discount. It is not recorded in the books. Only the net amount after deducting the trade discount is accounted for. Next is drawing. Withdrawal by the owner are the personal transactions and are adjusted against the capital account. Withdrawals by the owner are the personal transaction and are adjusted against the capital account, and it is not included in the profit and loss account. Next is income tax. For companies, it is shown as the appropriation of profit and it is not an expenses in the profit and loss account. For individual, it is a personal expenses. Thank you. Subscribe to my YouTube channel.